valuation of crypto assets. Before you start investing in Bitcoin, Ethereum, or other crypto assets, it's important to understand how to evaluate these kind of assets. One very important thing to understand here is that also in the crypto space, you have these winner takes all dynamics, which means that there are not dozens or hundreds of coins and assets per category which will be worth something, but all the power and the value is going to concentrate over the long run. If you look at the digital world with Web.1, Web.2, you see companies like Facebook, Google, Amazon, like one powerful search engine company, one powerful social media company, one powerful e-commerce company, and there are not powerful second place, third place, fourth place companies. And my thesis is that the same is going to happen in crypto as well. And I call it the winner takes all per category mechanism or dynamic. Because if you look at the category of digital gold, as it looks like Bitcoin currently is the clear leader, and it seems like it remains like this. If you look at smart contract platforms, you have Ethereum, you have Solana, you have Cardano, but looking at all the metrics under the hood, Ethereum is by far still the leader. We have privacy coins, as we discussed before, with Monero, Dash, and others. And also in this category, you will have a concentration of power and wealth, and there won't be dozens of coins around which will be very valuable, but rather just one or maximum two. And this is a super important concept and thought process I want to share here with you. Very interesting thing is also that the most value will be captured by the underlying protocols, not the applications in itself. Let me explain this in this picture here. Here, looking at the traditional web, you have the protocol layer and the application layer and the value captured. The protocol layer in the traditional web is the TCP/IP protocol, where all of these applications are built on. In the early 90s, it was not possible to invest in the TCP/IP protocol, but later on, when these companies and these applications came up, it was possible to invest in them. And as we all know, these are now the world-leading companies in software and tech, and they have provided or grown at a tremendous speed and provided a lot of wealth to its investors. So Amazon, Google, Facebook, just to name a few. With blockchain, this approach is being flipped upside down, that the most value captured will most likely accrue in the protocol layers. And of course, there will be applications built on top of the blockchain protocols, but the overall value which is captured will be in the protocols. So think about what kind of protocols are out there today and where is the most development and the most activity happening. The two biggest at the moment are Bitcoin and Ethereum, and of course there are others upcoming, but the more and more applications are built on either one of them, the more powerful they get, and also the more valuable this network is going to get over the month and years to come. There are traditional metrics you can look at, like for example the circulating supply of the crypto asset. Is it very scarce? How many coins already have been mined or are in circulation? What's the current market cap? What's the total addressable market in general? And then you have more like technical ratios, like the hash rate, the developer activity, or the transaction volume. And we are going to dig deep into these technical metrics in module 11, where you will learn about ratios, metrics, and exchanges. But one thing which I would like to mention and stress here in advance is that in the long run, most likely 99% of all crypto assets will be worthless. So really do your homework, think about these concepts I was just sharing with you, and then look at the metrics, the ratios, and hopefully you make the right decisions which coin or which crypto asset to invest in.